We'll talk.
Are you an online educator struggling to find your audience? Quasar Markets connects you with learners looking for you. Keep 100% ownership of your courses. No hidden fees. Already have monetized content? Get paid again and again. Apply today. Take control of your educational empire. Quasar Markets, where educators build their legacy.
Good morning, Quasar Markets, and good morning, BigBeat. How you doing, buddy?
I feel like, unfortunately, taking a victory lap. We've been talking about it for I don't know how long, Howard, that the economy is faltering. But yet the Fed keeps saying that inflation's up, so I'm not going to lower rates. And yet the GDP fell 0.3% in the first quarter. Okay, we can say tariffs. Yes, we can say a lot of things. We can say consumer spending. There's a lot of things we can say. I don't know, man. Wake up, Fed. It's time to understand that we were right, you were wrong again. Oh, but we need better data. Oh, we need better data. Oh, we need this. You got it.
You send them a free subscription at Quasar Markets?
I will give every member of the Fed a free subscription, but they'll even look at it because they don't even look at anything. So I don't know. I give them. I don't think they won't pay attention.
Yeah, I'm with you. Yeah, of course. This is what we've been talking. Let me turn down my thing.
I mean, Howard, think about this. If we get another negative quarter, that is what recession is.
No. They moved those goalposts.
I know. Moving the goalposts doesn't make it right.
Anymore.
But moving the goalposts.
They keep on pulling the football when I go to kick it.
Okay, Charlie Brown. Look, I get it. I get it, but they got to stop. You got to fix the problem. And Trump is right. You got to lower rates. Got to do it now. It's too late now. Honestly, it's kind of too late. Now we're going to have to.
Now people don't have money, so they can't buy the house anymore.
Correct.
You put them in a situation where they don't have the money, or they have to, put that money
to their jobs and everything else.
Which goes to the next slide I have here: ADP job shock. We've been talking about this. We had Paul on, of course, from Higher Capital, who, he knew this. He's been saying it for months. We've been saying it for months. We've seen it. I forget who we had on the other day who was talking about they had some friends, some kids who were graduating from college, and they're not finding jobs. There's no jobs for them out there. And these are kids that are really good. It was Dr. Ellman and my filming yesterday. a kid who he'd met who's part of that Florida Junior Financial Society thing that you've done some talking to. A kid who was just really upset, who's going to try to do his sort of own trading because he can't find a job coming out of work. And, same thing. I've got a lot of friends getting laid off or taking the buyouts out of the government. And I think that they made some mistakes. Some of those people who thought they would quickly be able to shuffle into the, private sector, that those jobs aren't there right now. And if you don't have a backstop of the U.S. government hiring, so that's usually our bark stop, right, Steve? We should talk about that being in D.C. We know the largest employer in the United States is who? Federal government.
Yes, it's government, yes.
So, that's definitely there. Markets are getting just trampled this morning. Qs look like they're going to open down close to 2 percentage points by about 1.5. VIX is shot back up to 26, up almost 10%, ticks down to -500, advanced decline -23. The only thing I'll say is I'm not scared about it, though. I don't have that fear and, pit in the bottom of my stomach because I think we already knew this. None of this was a surprise to me today.
Yeah. It's not a surprise, but seeing it in headlines, it is.
Sucks.
It's not good. Yeah.
Yeah, I'm not happy with it. I'm not proud. It's not one of those things I want to say, hey, congratulations. We got it. Good morning, Mr. Flanagan. Yeah, come on, Fed. Get it together.
Yeah, absolutely right. I mean, I can't yell loud enough. I know the Fed's listening to us. It's time for them to actually act now. We say that, and yet I heard Fed's former Fed Governor Clarida on CNBC this morning saying, "Yeah, but the Fed isn't saying that. Fed's not going to cut. They told you they're not going to cut." Wow. It's almost like they're flying in the face of like knowledge. It's like, here's what happens. Here's how it works. Oh, but our job is to keeping inflation in check. Our job.
Well, we're back to the world of transitory, so to speak, right? We're back to Janet Yellen, sticking her head into the soil like an ostrich and saying, "No, there's nothing wrong here." And that's what we're doing again. That's what worries me. And again, I keep going to the same thing. Again, man, does the market want to go up? Man, it does want to take good news. I mean, Lutnick, who we all sort of said is not the guy that we really want as the speaker. He's good behind the scenes.
But you know what? I think
moved it up nicely, but now it's all gone again. It's all gone. Like, that's all I mean is, how many times are they going to cry wolf and say, we are ready to show you all these tariff improvements? And then we hear crickets.
I will say this much. I did like what Lutnick had to say yesterday, Commerce Secretary Lutnick. He is CEO of Cantor Fitzgerald. So
they're all great businessmen. I'm not doubting that at all. They all became very rich for a reason.
Yeah, but the problem is that they can't take their business acumen and put it in the government. It's two different things, right? The government's job is only to spend money. They're taking the revenue from the people.
It's to grease the wheels of society.
Because they're made to send their money to Washington, right? Whereas in business, you have to go out and you've got to be the showman and get the money, right? There's a difference. So government and business don't really always work together. It's like oil and water, but sometimes they do mix and it tastes like crap.
Yeah, we've had some great cases. Jay Clayton did a good job. There's a lot of them that have done well. I don't want to make it sound like they can't, but we also find some that just don't seem to understand that how government works. They end up Elon Musking out, right? It happens quickly. Correct. They burn out quickly.
And Elon Musk, we found out now, spent more money than he actually saved now. So it really, this is not new to us, Howard. Those of us who spent any time in Washington, especially me in the White House, I can tell you this is not how it works. We knew this. We screamed about it. And here it is. The house of cards fell in 100 days, not in 4 years, right? So, look, we still got to get through what we got to get through. As I always say, play the game in front of us. So here's what the game is in front of us. But this is getting worse. I am seeing on Bloomberg now the criticism of Jerome Powell is picking up now. Eli Lilly, GE, NVIDIA. I mean, there's a lot of CEOs going to the White House today. Yesterday, we understood that Trump spoke to Tim Cook. Why don't you bring all your manufacturing to the United States? Well, I will, Mr. President, but it's cost too much for labor. And as soon as I can get a machine to actually make my, intricately make my phones and computers, then yeah, I'll move everything back to the United States, but I can't do that right now. And he became, boiling it down so that he understood it in a way, right? I can't just move it all down there.
Why is it taking so long to understand? I mean, these are things again that were very apparent to everybody. The reason we don't
because they didn't have a plan. I mean, it did not help.
You nailed it. You're right, because there was no plan, so they never thought this far in advance. I will say the president had one win yesterday. He did get Amazon to reverse their internal plans to display import tariffs on product pages.
And I think that's wrong. I think Bezos is right. I think
I do too. I'd love to see that transparency. I love it. I mean,
transparency is the key here.
You know, it's funny and it sounds like a joke, but I was looking, we're trying to go away in July. So I was looking at Airbnb last night, and I love the fact that all the fees and all the crap is all built into a price now. Just let me know. I always knew there was going to be extra on, but I never knew what it was going to be. What did $400 a night actually come out?
Tell me what it's for.
Yeah, just lay it out for me. Guys, I'm the worst. I am the best consumer for somebody, because if there's an all-in plan and I can afford it, I'm buying it, so I don't have to worry about nothing.
Right.
You know what I mean?
But I want to know what to buy.
I had the all-in on cell service back when.
But I tell you what, you want to win? Tell us where the product is made, and if you're a made in the USA person, guess what? You're probably going to buy U.S. products.
They do that. Amazon is pretty good about that. Remember, Walmart's the one that really started that when they did that big push to buy American a few years ago. They, I have to say, did a very good job, and everybody sort of followed them. Steve, it's all about earnings, though. We're still moving things somewhat in right directions and in wrong direction. You know what I mean? Is up or down. So I do think we want to talk about some of those. The big one that killed the market last night is SMCI. They're down, you know, they were down as much as 19% overnight, now down 20% here today.
I mean, they got problems. SMCI's got so many issues. Their accounting issues.
And I'm going to have to, you know, I hate giving you congratulations, my friend, but I have to on this one, because 3 or 4 times when I was thinking about buying them on this resurgence, you said, no, I don't trust it yet. I don't trust it. And I stayed away because of that. And I have to thank you for it, because it's one, even today, I can't hold my nose and buy it today. They're a company that has not only lost their way as a company, they've lost their consumer, is what we found out.
Yeah, and I'll tell you what's interesting is the NASDAQ gave them an opportunity to reconcile that as they were thinking about delisting them. It's time to delist them. This is absolutely out of control. Now they're delaying orders. Yeah, good. They're posting it now and aging inventory, and there's problems, and they're not correcting their numbers. This is just a scramble company here at this point. I call it an egg company because they're scrambling to fix it. It's over for SMCI, and the problem is dragging down the rest of the chip sector for no reason, because this shouldn't be any way. It should not be affecting NVIDIA. This should not be affecting TSM.
Come out and take a look at chips. They're just all in the red. NVIDIA down 4%. AVGO broadband down 3.22. TSM holding up pretty well. ASML down almost 2 points. AMD down 3.5. It's just a bloodbath. Marvell down 4.29. What this might be for me, and I'd ask you, for me, this might be an opportunity to look at some of these others that are getting beat up because of SMCI. So, you know, Marvell didn't have a bad day today. They're down 4.2% in the sympathy play. So I might start to look at these. I'm not saying I am yet, but these are ones, if we continue to see a slide today and some just irrational selling, as you like to call it, Steve, would you be looking at any of these?
No. I just don't. Chips that are not made in the United States are going to be hit by massive tariffs. They're not going to be playing around with this.
Well, what about Intel then? INTC, which is down, you know, over 3%.
And Intel is a second to just SMCI with problems, right? They just can't get their systems are having really problems, and in building new chipsets. So they're struggling. The chip sector is struggling right now, and it shouldn't be. It's where we should be leading, and it's not. So. Yeah, I mean, you know, you asked about earnings, especially with SMCI here. 73% of the S&P 500 is beating. On the average, 10-year average is right around 79% usually beat on earnings. So it's close, right? It's a little bit less, but that tells me everything, right? That earnings are not really not the problem here. It's still the one big alley cat sitting in front of you, and that's guidance. If you're not raising guidance, you're in trouble. If you're maintaining guidance, like this morning, Norwegian came out. I spoke about Norwegian on Schwab this morning. They missed by 2 pennies, And it wasn't even the problem they missed by 2 pennies. It's that they maintain their guidance, and that's not good, right? And I talked about Royal Caribbean. They are the company that increased their guidance, beat on the numbers, raised their guidance by $1, and said, look, our numbers are really, really good. We've got new things coming up, 2 new ships. That's what people are looking for, right? They're looking for that excitement that brings them to the next level. And we're not seeing that in SMCI. We're not seeing that in Intel. We're not seeing that right now. And you know what? If you're going to protect the whole market, it's got to be Apple, right? So Apple better come out and say, hey, look, guess what we have? Look at the bright
But
new
Steve, here's what I got to bring up to you. I hate to pay the negative part of this. RCL's down. They're actually down.
It is, but it's way up in the last few weeks.
No, it's not. It's not. It's down. That's what I'm saying. It's down since earnings. It's down since earnings. It is actually lost all of its gains that it had with that good news yesterday, and is now down 4%. It opened yesterday at 209 and change. It went up to 224. Now it's at 208. The day before earnings, it closed at 211.
Yeah, and I'm happy about that because guess what? They'll start to kick out more free cruises to me. I'm okay with that. But look, the truth of the matter is, if you're looking at best in class, it's Royal Caribbean. I said that.
Yeah, no, I agree. But what I'm saying is that's what I'm talking about. The sympathy plays. Like, I'm with you. I'd be buying an RCL today.
Oh, it's come out already. Trump is now saying that the economy has nothing to do with tariffs. That this is Biden's stock market, not Trump's.
Oh, God.
Yeah, Mr. President, it is your now market. Yeah, so you expect, but you kind of expected that out of him, though, right? I mean, you didn't expect him.
There's the irrationality, but yeah. So that's all I'm saying is where I'm looking for value is maybe some of these stocks, like you said, where RCL, which had nothing but good news, and yesterday when they were climbing up to 225, everybody wanted to jump on board. Now it's dropped down to 208. I might be more interested on a bounce if it comes back towards this 200-day MA personally. So that's all I'm saying is I do think that there are some laggards plays to be had. We get the rip your face, as you've talked about, bull moves during these markets. They just don't hold. This is what we see. We're going to see this until this tariff mess is much more clearer, where we have a great 2-3% up day. Some stocks will go up 5 to 8% and then just retrace them the next day. Because
I mean, look, we're still in a world where people are nervous and scared, and they need their cash. And you just said this morning, right? The kids can't get a job, so they go to trade, and they don't know how to trade, and they just get in and get out every day, and the PDT rules and everything else. Then they lose all their money, and then they become part of the welfare state. Great. This is not what we want. We want to build wealth, right? We want to build investments, portfolios. You get $100, you stick it in the market. You get $1 billion, you stick it in the market, right? Because you don't know what else to do with it. Right now, you saw, my goodness, the 10-year went from 4.14% to 4.23, and now back to 4.175. This market is irrational right now. It doesn't know what to do. It's on steroids, irrationality. And right now, we're seeing that. Now, I need to see the tick. I need to see the tick this morning start to move in one direction or the other. We saw it yesterday that it was. I told you yesterday in the morning that it's going to melt up all afternoon, and it did that, and I like that. But here we are now, the next day, seeing down 0.3%. So. President Trump goes on to say that tariffs will soon start kicking in. Our country will boom, but we have to get rid of Biden overhang. This has nothing to do with tariffs. He has left us with bad numbers. He's continuing talking right now, screaming. I guess he was screaming earlier. So, wow. I'll post this here so I can see it now. But interesting here. Ukraine's Prime Minister Zelensky says U.S. are working on a final deal right now, details of a mineral deal. So that's good. We might get minerals that might help some countries, but it'll hurt some companies here in the United States. So news is coming up pretty fast here this morning here, Howard.
Yeah, that's not going to help the markets. Just news in general.
Right.
Yep. Tick is staying pretty stable. It's stable at negative 450 basically since 8:41 this morning. So we haven't really seen it move. It's been pegged right down.
We're seeing people selling Bitcoin at 95 95 to 95.2. It just can't get above that. Is there a big wall being pushed up there?
Yesterday I said yes, and
Yeah,
it hasn't changed. Yep, absolutely. We're not
who's got
right
that
now,
wall?
we don't have the strength to break through. It's going to take what it took last time, right? It took us about 7 or 8 days to break through that other wall at 90. It could take the same amount to break through the next one. If anything, that's actually, a better move. But we've definitely, you're at a tough spot. We haven't spent much time above 95,000. So, it's not like that's where we spent a ton of time and have a ton of price discovery. I'm very happy to sit just below 100 right now and get those weekends out and allow the long-term holders to get in. So I have no problem with the action that we've seen so far on Bitcoin. It's doing great, in my opinion.
Yeah, I mean, it's holding up considerably. I mean, the world's falling apart and Bitcoin's staying up. It's interesting.
Yeah, we haven't seen the mean reversion. So it's showing strength. Again, we just talked about it. Everything that went up yesterday, when I look at my laggards and gainers here on my watch list, are almost the opposites of yesterday. Today is down. Tempest AI, we talked about AI was flying yesterday, right? Cores, CoreWeave was flying yesterday to the upside. Albemarle and all the miners were moving up. Now they're moving down today. It's been, so that's why I'm saying Bitcoin looks stronger to me. It hasn't had that, because even gold has shown that, right? Gold shot up and then shot
maybe it's because Josh Hawley has decided he's going to let the members of Congress buy Bitcoin without any problems. If you don't know what we're talking about, this morning the Senate's going to vote on the Hawley Amendment so that members of Congress can no longer trade. They'll have to give it up in 60 days. We'll see if the president signs off on that. Calling it the Pelosi bill. Woo! I wonder if Nancy's going to vote for that or vote against it. Look, I think he's right. Members of Congress should not vote. Should not be able to vote on situations and then be able to trade that stock. Thank you, Marjorie Taylor Greene. Wow. And Nancy Pelosi. I'll call them both out. You shouldn't be
both sides of the aisle on that
bad.
one. AOC is one of the. AOC went from having something like 50,000 in net worth when she entered Congress to now being somewhere in the vicinity of like $100 million. That didn't come from the right way. It's all of them. And as we said, what I want is what Joe Kern and the people and Becky and the folks on CNBC are held to. Why is Congress not? And maybe you could talk a little bit to that, but they're not allowed to own individual stocks.
Right, they should own ETFs. They should be able. There's nothing wrong with that. I have no problem with that. But to be able to, own individual stocks, no, I'm okay with them owning individual stocks if they don't have. If you're in the majority and you're in a leadership position, absolutely not. Right. The Hawley Amendment is a little overreaching to me because it's not well thought out. Right. I think if you thought it a little clearer, that say, hey, look, if you are a member of Congress and you're in a position where you can, have any influence over this stock, that's different. He's also including spouses, so spouses can't. He's definitely
it should be the family. Which it
is. But what if I'm a son? What if I'm an uncle? Hey, I got to get rid of my stocks because my
I would have it the same as it is for CNBC and those folks. So whatever they're able to do and not do should be the same impartialness that we find from our elected officials, where they win if broad market sector ETFs go up, and they lose if broad sector ETFs go down, which means if they do a good job in general governing us, then those broad markets should go up, and then everybody should be happy. So I don't have any problem. I do think it's something we need. I've been railing about it, but I do. And again, as the strongest Bitcoin proponent and crypto proponent there is, they shouldn't be able to trade that either. Again, if they want to trade, no, I'm not even IBIT. They shouldn't be able to do it. They're making rules and regulations about it on a daily basis, and involved. So they shouldn't. Man, Qs have bounced up a little bit here, seem to be bottoming out around this 466, 465 area here. Brought it back down below that key 466 support that was resistance. So, this 466 area, we tried to get across it on April 9th. We got knocked down the 14th, the 15th, the 23rd, the 24th, and then we were able to break it. And it acted as some pretty good support the last 2 days, the last 2 trading days. I'm nervous here. If we slip back below 466 here, we could really see downside all the way to 450 on the Qs. So that's our next key level of support, to be honest with you.
We're here now. Zelensky now says that future U.S. aid can be considered as part of the contribution to investment fund under the deal. So they're tying a deal, more money from the president in the U.S. country for them based on this minerals deal. So is this prepayment for the minerals coming out of Ukraine? That's interesting. Then if that's the case, it should hit companies like Albemarle and Newmont Mining and places like that that rely on minerals. So it's a little interesting there.
Yeah, absolutely. Steve, all the earnings we've had so far come out. We had First Solar come out. They were up big last week, we know, or 2 weeks ago, as some of the money from the Biden administration was released. But got hit real hard here, down about 13% now. They missed Q1 earnings. I do have notes here on them. Sorry, so many earnings reports here. Here we go. So yeah, they warned that Trump-era tariffs would cut revenue profits in 2025, and they lowered their estimates tremendously also. So that definitely has First Solar getting hit pretty hard here. Starbucks is another one. I've talked about it. I'm not a big fan of Starbucks in general. And they're
what do they sell? Coffee. I don't drink coffee. You know, look, I get it. Coffee. Listen, I'll tell you one thing. Coffee prices are coming down a little bit. Cocoa also. I see cocoa 8,657 right there. So actually, cocoa is now down 5% right now. Look,
that's off of such huge record numbers that it's it's a tough one. But Starbucks, with them, the thing that I keep looking at is their same store sales just keep on going down. It's like the 5th quarter in a row that they've had same store sales move to the downside. So Starbucks getting pretty hard from that today. On the other side of that, I think I do have it.
I'll tell you one thing. If the economy really is faltering, people are losing their jobs, and we're starting to see this massive problem, and of course, according to Trump, it's Biden's markets. People will slow down their spend at Starbucks. They won't be buying that Mocha Laka Chaka, whatever it is, for $20,000 to get in the mornings. They'll stop doing that. And they did that last time during COVID. Starbucks really got hit hard. You could probably see that at first. You can see it again. The economy contracting here. I mean, this is the first. Well, guess what? The last time this happened, COVID. And guess who the president was? It's starting to be a theme here. It really is.
Yeah, no, I can't argue with that. On the other side of the food spectrum there, Yum Brands had their earnings here also a miss. For those that don't know, Yum Brands is Taco Bell, KFC, and Pizza Hut. But again, at least their same store sales were up 3%, and they showed some growth.
Let's break that down a little bit. At KFC, that's chicken, right? So you talked about it last week and this week with Tyson and Smithfields. Yep, exactly. And Pilgrim Pride. Chicken is having a problem right now. And especially with the bird flu and things like that. Pizza Hut, totally get it. With the people eating less and less unhealthy pizza and burgers, totally get it. Taco Bell being up 9% does not surprise me, and I'll tell you why. They have gone out and reconfigured a lot of their stores and making them nicer and cleaner, and people are going back to it. People like the cheap Mexican, and they are eating it. And they've come back. I actually went to a Taco Bell, believe it or not, for the first time in decades, not too long ago. So this doesn't surprise me one bit. I was quick, I had to eat something fast, and I did. So there we go. So now I understood that. So but here's what they did. They missed their estimates, right? They had much better revenue, and I think that revenue came out of Taco Bell. But their adjusted EPS there of $1.30 means that they raise it a little bit. I think even they were surprised by how good the Taco Bell came out. So I do like Yum Brands. I am also interested in Yum China as well, to see where they come out, because this is the will we be delisting these Chinese names too as well? YUMC. The question for me now is the food, and I'll defer to you, Howard, as Mr. Food here, understanding the markets and restaurants better than anyone. But when I look at the next generation of people that are eating, the younger people, they're not going to Pizza Hut, right? They're going to the Taco Bells, and they're going to this new version of Chipotle that Chipotle
market has opened here. So markets have opened.
Yeah, it's quiet.
Right at 466.13. Steve, the habits of the younger generation, I do think that they dine more. They care about experiences more than they do collecting things. So restaurants, nicer restaurants do better. Fast food, not as much in that kind of case. Here we go. 466 seems to be the spot. Holding up so far. We want to keep an eye on. Tick negative 580. Advanced decline negative 46.44. So
that ticks down. I mean, I'm watching this. Is it a short today? I don't think so. I think it could be where we get back to the 200-day and boom, right back up we go. Let's just see.
It's going to be, and for me, it's these pre-market moves are doing all the move. In other words, then we just retrace it. So yesterday, we jumped up and then we melted down from there. That's where we melt. We already took the elevator down. Now we'll melt up the rest of the day.
You think so? I think
what we've had going on. I mean, so
it
far
has been that way.
See it break. I have to see it break that trend. Let's put it that way. To think it doesn't happen. I'm not fighting the trend, as you say sometimes.
Yeah, I wouldn't fight the trend today. I mean, advanced decline.
That's been the trend. The trend has been, pre-market big moves up or down, and then cash market sort of plays the other side of it. That's why it was so deceiving, last couple of weeks, is that we've had these nice moves up, a point here, half a point there, but they've really been done early in the morning or, post-market, pre-market trading. Tick 7, it's almost negative 700.
Yeah, I mean, I'm not saying anything here. I think people are nervous. They're scared. It's in print now, down 0.3%. We were expecting up 0.4%. If we were up, the print was actually up. Would Trump have gone to run around and said, "Look what my tariffs have done"? But no, I don't think so. So here we are. It's in print. I don't know what else the Fed can do at this point. Trump is right. We need to lower rates fast and lower them. It might be a day. But now I said yesterday, you remember what I said yesterday? I said, remember when bad news was usually good news for the market? Now bad news is actually bad news for the market. Remember the good old days?
We are seeing some winners here. Humana up about 6.45 this morning. So Humana, nice beat. Moving to the top side here. Kingsoft Cloud Holdings. This is one of those ones, though, I don't trust. It goes up and down every day. Chinese cloud name, AI, but as crazy as it gets there. Train Technology, nice move to the upside, too. Nice construction company, up about 5.67. Seagate had good earnings here, Steve. I do have some data on them. STX, for those that don't know, they had a really nice earnings report. If I can find where I put it here. There it is. And they were up 7.5% here earlier. As I said, they're still up about 5.51, but that goes to what I'm talking about. They've already retraced about 2 percentage points from the highs this morning. They crushed expectations. Again, Seagate, Western Digital up on that news too, up about 5%. Very similar companies make most of their money from hard drives and controllers. Trying to see who else. Mondelez up about 3.4 today. We talked about Yum Brands. Wingstop had their good earnings report, up about 2.26 also. Smithfield, which we know was down significantly yesterday, up 2.15 today. That goes to what I'm talking about with the up-down day thing that seems to be in play. If we look here on our screener at the laggards,
I'll tell you a lagger to look at right now is In-Phase Energy. That's a big one today that got hit. I will say energy in any way, shape, form, or fashion is going to be hurting. I mean, look at the price of oil today, under $60 a barrel. I talked about this yesterday, like what needs to be happening here in the oil markets. 60 is Goldilocks for people, that are driving, and it's Goldilocks for FedEx, it's Goldilocks for UPS. It's not Goldilocks for the sands, right? If you're pulling up oil up in the North Dakota region, if you're looking in the Permian Basin in Texas, not so bad, but it depends on how you pull the oil out. But this is energy it's going to be really hard hit here the next month or two if we don't get oil out of this stagflation. I mean, look, I've said this. I've banged the table twice on this show. We are now living in full-blown stagflation. That's where the economy goes down and inflation stays up and people lose their jobs. This is literally the worst economy you can be in. Stagflation is bad, bad, bad. It's where everything that you don't want to happen happens. And yet the markets are holding up. So, you think there's silver back to 32.69 after the sell-off this morning, right? Gold back to 33.10. It's telling you everything. They're going to the safety play. And now the 10-year yield note, 4.17% coming back down because why? They don't need to raise those rates to attract people. So right now, I'm not seeing that.
Now, Stanley Black & Decker also had earnings overnight or this morning. SWK down about 3.56%. Their biggest takeaway that I had here that's killing them is they made it clear that they will not be absorbing the tariff. They will be passing it along to their customers. They're raising.
I'm shocked. Yeah. Look, that's what happens. Tariffs do not affect the country. They affect the consumer. Right? It's not hard to understand this, right? These margins are slim as they are, especially for Black & Decker. And I have Black & Decker products. Listen, I don't tell everybody out there, but I actually did some yard work yesterday.
What?
Yeah, I know. Don't be shocked. Don't tell anybody, Howard. I might have my own landscaping company, but look, I think that when you look at it from that perspective, Stanley Black & Decker's like, look, I don't sell that many things. My maybe some batteries from the electric side of things, and maybe some corded because they need chips in their machines, right? Because they have cutoffs. So they do need those things, and they're not made in the United States. So guess what? Boom. There you go.
Yeah, they basically broke it down. They said tariffs are expected to cut their full year EPS by about 75 cents. That's based upon, a 315 to 345 estimate. So it's a pretty big hit there. They said price hikes in April across U.S. tools and outdoor, and another round of price increases will come in Q3 when they have to reload for their next step of stuff. They have a supply chain realignment underway, but it will take up to 24 months for that to turn around. That's the other part is the president seemed to have the feeling that you could just build a factory and be ready to go in a month or two. And as most of these are showing out and, 24 months, they did say that they've already notified their customers of the price increases. So they'll be interested to see what the Home Depots, Lowe's, and anybody else says sort of about that, what their comments are. Are they going to eat some of that price or not? But their organic growth was only up 1% over the year. So Stanley Black & Decker got hit pretty hard. Caterpillar just had earnings, Steve. They were up. I don't want to say are because everything's moving so fast here today. I don't want to say that. They're about neutral now. They were up on an earnings miss, believe it or not, because of what they had said. Again, Caterpillar, they came in at net income of around $2 billion, which is down from $2.86 billion a year ago. So
okay, Caterpillar has gotten beaten up, right? We get that, but I will tell you that the future for Caterpillar looks pretty bright if these manufacturing jobs come back. They build these buildings because they have to, push down the dirt and they got to move things around and dig ditches in a higher level, right? Caterpillar does. They have a lot of cool products, actually. I think I've always wanted to go smash things with a Caterpillar, right? I've seen those.
My channel check with them that has me a little worried, though, is they said they're seeing weakening demand in construction and resource sectors. That's adding pressure to the company. So that had me a little bit worried there. From theirs, they also said it makes sense that the dealer inventory shifts. Dealers are cutting inventory. So they're seeing that again, orders are sort of being cut out a little bit for that. So they want to, they mentioned that also.
But I think one of the cool things about Caterpillar is it's not your grandfather's Caterpillar, right? And I think that's what I like about Caterpillar. Do you know that the Caterpillar has Caterpillar India? It's called Hindustan. Do you know that they have Caterpillar in Asia? So if things go well over in India, things go well in Asia, then they go up, then they make money there too as well. So their moat is not just U.S. building right now. They're not just digging in the ground in the United States. They've also got an oil and gas company. They've got a water company. And I think one of the cool things that Caterpillar does is their rental business. They don't just sell you a Caterpillar, they do rental. So I think in the future, Caterpillar could be a nice little move here. I think we could see some upside in Caterpillar if you're looking for something. It's not a normal tech stock and all that craziness. Yeah. Steve Flanagan announced this morning. He said that Atlanta Fed's expected GDP Q1 at minus 2.7%. Again, Steve's right. Look, and he usually is. So they're right. Look, if the Fed in Atlanta. They change those numbers so quickly. They change it faster than I change clothes, and I changed clothes 3 times this morning for being on a show. So I don't. The Atlanta Fed numbers to me don't really mean a lot. And I think Steve's Flanagan's right. We expected really bad GDP numbers, worse than the minus 3%. But Steve, let's is Steve out there? Can we just bring him in? I don't know. Is it too soon for him?
He might not be ready for us yet.
Put the clothes on, Steve Flanagan. Get your butt in here. Let's just get going. But look, I think in a lot of ways, let's go back to Caterpillar. Caterpillar is tied to the GDP of the United States, right? I mean, if we are building and we're growing and we're doing all those things, and businesses need new buildings, guess the first person they call is Caterpillar. Hey, go clear my ground. I need this done, right? And that's those kind of things move things. So, look. We talked about this before. FedEx, UPS tells you, is the economy okay? And then you have to go back and say, well, what does FedEx live off of? They live off 2 things, right? They're people, that us buying, selling, right? Delivering stuff, and the price of labor, right? But they also have to live on the price of gasoline, right? Because they put gasoline or LNG into their trucks in electric. I saw some Rivian Amazon trucks. So you know what? That tells you everything. That will be your first look at the economy. And we're seeing that Amazon's saying, well, you know what? There is some slowdown. And guess what? I always tell people there's a silver lining. I take advantage of it. I told my wife the other day, look, hey, you know what? If the economy is going to falter, we'll just wait. We'll hold our cash back. We did it during COVID. We did it during 08. I did it during 97, 98. And when the markets fell, I took advantage of that. I bought stock. I bought things that I needed. But FYI, for those of you who know that Howard and I have been talking about this, did a big one yesterday, a show on it yesterday, about stocking up. Look, we also heard that the city of Los Angeles yesterday also had a big walkout, a 2-day walkout, Monday and Tuesday. Guess what's right behind them? Probably longshoremen. Yeah, they got a contract, but they may not be happy again. And if China is not delivering stuff and we're not getting stuff, but we're not buying stuff, then the economy really starts to slow down. All right. When does Trump say it's my economy? In second Q2, Q3, Q4, 2 years from now? At some point, he's going to have to acknowledge that. So, yeah, I don't think we're quite there yet. Bitcoin's still slipping here, Hondo.
Well, forget Bitcoin. Q's down 2.56, SPY down 2%, Dow Jones down 1.63, RUT down 2.44. We're still seeing tick now down negative 800, advanced decline negative 55.72. So the market's speaking. It doesn't like what it's hearing today out of anywhere, out of earnings, out of stuff, because I'll point out I have up on the screen UBS. UBS had, I thought, some pretty strong earnings here this morning. Net profit of about 1.6 now. I didn't put it up on the screen for you here. If I do that, it would make it a little bit make this make more sense. There you go. Net profit 1.69 billion, beat the estimates of 1.3 billion. Their revenue again above forecast. Their underlying pre-tax profit again beat the estimates. Their trading surged. Their investment bank revenue was up 32%. Their equity trading was up 34%. Their FX rates and credit was up 27%. And their pre-tax profit was 696 million versus 404 million last year. So, and it beat the estimate of 600 million and down 2.43% on that great report. So it just shows you what's going on. They're also doing 500 million in Q2 buybacks, 2 billion more planned for that second half of the year. They did also say that their Credit Suisse integration was on track, and actually pointed to that their legacy losses were less than expected there, which helped them beat their pre-tax profit, estimates.
I mean, UBS took some of those profits off and they put it in cash. And guess what they're going to do with it? What happens to a company? And you know the answer. I tell us all the time. What does a company do when they have lots of cash and no place to deploy it? What do? They buy their stock back. That's what they do. They told you the economy is not so good. It's so bad that we don't even know what to do with our cash. They are literally buying their own stock back because two things. They think it's cheap, and because they have no other place to put their money.
They don't know what you're right. It's not, doesn't make sense to put it into, they're not an R&D type company and things like that, where you just put it back into the company, so to speak. They did talk about too, they got a little bit of headwinds coming from the Swiss banking reforms, the opposite of what's happening here in the US.
Chicago PMI, hold on one second. Chicago PMI now coming in at 44.6, expected 45.9. Previous was 47.6. Anything under 50 is contraction. Chicago PMI is getting worse and worse. This is really not good. And you talk about Caterpillar. There you go. Caterpillar's south of Chicago. Boom. There you go. Ouch.
Market actually liked that news, it seems like, so far. Let's see as they
because you know why? Because it puts more pressure on the Fed to lower rates. And here's what I'm saying. I was not in the camp of the Fed lowering rates by a quarter point. I was like, I don't know. I think they are going to lower rates by a quarter point. There are a lot of people now, and I'm starting to agree with them, that we might see the Fed lowering rates by 50 basis points. There is a good chance of that happening. But you heard from Fed's Clarity, I think I said this morning, and no, I don't think so. I don't think they're going to do it. Okay, well, they better do something.
Right. Ticks finally letting off a little bit here, and only down 353. Advanced decline sticking right around.
Okay, so Reuters has now seen the deal from Ukraine, says that 50% of revenue from royalties, production sharing agreements on new natural resources, permits, and licenses which Ukrainian state is eligible to receive will go into a U.S. Ukraine fund minerals deal draft. The whole points here, I'll put it into I'll scroll here to the bottom so you guys can read it off. The whole deal now there is an actual deal now in place. So that could be a difference here. Now we're hearing now on the Fed tracker now that the traders are now fully pricing in 4 quarter-point Fed cuts for the end of the year. That would mean that they would have. So let me just put that up here for you. Traders are now fully pricing in 4 quarter points. So it's a full 100 basis points there. So that's a lot. That right there should push the markets up, tick now down 100. We might go positive here on the tick here. That's
Trump trade advisor Navarro. We like where we're at now with respect to China.
Really? Because China said so many nice things about us lately. Okay. All right. Well, I think Navarro says the markets need to look beneath the surface. Sorry, what machine does he have that I don't have? What data points does he have that I don't have? Trust me, I'm sitting here in the screens all around me with data from everywhere in the world. I don't think he has knowledge that I don't have. I mean, if you think about it from the perspective of deals being done, we know almost, well, you see Ukraine deal right there was told to us in seconds. Reuters got that deal. There wasn't a deal a week ago. There was no one saying that. So I don't know what he's talking about. about. Maybe he needs to go. But Tick just went positive for a second there.
Yeah. So like I said, they seem to like the news.
But the VIX,
I don't know why,
is
but they do.
going
So
down.
there you go.
Navarro now says GDP was dragged down, but it won't be the case next quarter.
Yeah, he's on CNBC right now.
Yeah. I mean, I think what we call that wishful thinking, right? Well, let's put it this way.
I'll tell you
If
what,
it does,
I don't think I'll be trading today. I'll be honest with you. I don't like what I'm seeing around.
Yeah, I don't see much that I really want to invest in. I've got my positions in that I like. I'm holding steady with cash. I'm still long from 77.
Navarro, best way to negotiate with China is very quietly. This is quietly? 700 tweets a day?
Wow.
I don't want to know what he thinks is in the public then.
Yeah, I mean, listening to him right now, I don't know that the markets are not liking this too much.
We do see some Reuters, South Korean officials headed to Washington for talks over U.S. tariffs. So, again, like I said, it's just a battle of the tweets. How fast the White House can get out their news versus how fast Main Street media can dismiss it. I do see Mr. Flanagan has come in early for you here, Steve. So let's get him in here and see what's going on. How you doing today, Mr. Flanagan?
Oh boy, hostile markets today.
Well, let's go, baby. Let's get off the ropes. And it's almost like I feel like Muhammad Ali, move like a butterfly, sting like a bee. I've seen. We can go through all the adages, but we're hearing Navarro talking right now on CNBC, and it just seems like he has completely lost. Talk to me, Steve. Let's go right to it. Okay. Minus 0.3%. First thing out of Trump's mouth was not my problem. It's Biden's economy. I'm trying to fix it with the tariffs. Talk to me.
Yeah, I mean, minus 0.3. A lot of people were looking for a minus 0.2. Atlanta Fed looked at minus 2.7, right? Quick analysis that I was able to pick up on one of the wires was two big negatives. Obviously, net trade. Everybody front-loaded the pre-tariff announcement, right?
Yeah.
And that they're saying exports less imports was a hit of about 4.8%. Previously, that was up 0.25%. So that's a 5% swing because people preloaded tariffs. And, of course, government, now that we're in a new era, was a minus 0.25. And so that had always been the big plug by the government to maintain, your GDP. So two big negatives in that number. So the expectation was it was going to be on the downside. So I'm not going to react to the first quarter. I'm going to stay focused on the headlines. And one of the big headlines, Steve, that we picked up on April 28th, just a few days ago, 2 days ago, the U.S. expects to borrow only $123 billion in Q2 25. Only, but that's been usually over $500 billion.
It has been, yeah, right.
So, whoa. I mean, if we could,
did that get confirmed in today's announcement by Besant? Because I don't think he went against that today. They did their announcement. April 30th was the Treasury for the next quarter. That news is already out.
Right. So this was April 28th or that came out. So my only comment there is, wow, if we can get a handle on this massive budget deficit, what a huge positive to the marketplace that would be. And so, I am looking underneath. I don't particularly like Navarro. I think, I think we could do better. But I think the only thing I could agree with there is you got to look under the hood a little bit and look for some of the silver lining, the light at the end of the tunnel. I expected the number to be bad. When I look around the world, you had GDP numbers out in other areas. You had, well, let's look at Canada, minus 0.2, continuing with anemic growth, right? Eurozone, Q1, plus 0.4. Hey, wow, that's better than the US. But that's coming off of a 0.2, and that's coming off of minus, plus 0.1, minus 0.1 for the last 2 years.
But Steve, the Fed says we are in inflation, so they can't lower rates. Great. The numbers just came out that we are minus 0.3 in GDP, and people are losing jobs. We saw another 20,000 people losing their jobs in California. That is pure and simple, flat out stagflation.
Yep.
So that's the worst kind of economy we can be in, right?
They've got to be, Steve, the three of us have been talking, for months now. You cannot look around the world and tell me that I am holding firm here because of inflation, right? Because everywhere in the world, inflation. In Europe, they're not even looking at inflation anymore. They've already said, under control. Now they're totally focused on anemic growth. China is in deflation. Okay, so what is the U.S. waiting on here? And Steve, you are bang right. Look at the numbers. We're getting unemployment starting to pick there. You've got now a negative number. Okay, slice and dice it. Plus a half, minus a half, whatever. Growth is lower. The Fed's got a dual mandate. One of the mandates is done. Inflation. It's in the zone.
So you're saying that the Fed is now agreeing that inflation is under control. Is that right?
No, they're not.
No, they're not. We are.
They're not. I don't think. Right?
We are.
We are. We are. They're not.
Right? It's in the zone. 2.6, 2.4.
Yeah.
Come on.
So how do we tell the Fed that they're, how do we get them to listen to us and say, listen, how much more news do you need? I mean, traders are right now. They're now pricing in 4 cuts of 25 basis points each. I get to all the way to the end. So that means one of those cuts has to be a 50 basis point cut, right?
But those traders have been wrong. Look at what those numbers have been over the last 6 months. Yeah. So I do want to point that out because I don't want to make it seem, because I used to be guilty of that, of acting like FactSet was experts. Though it has been very poorly, in its results. And I just want to go back a little bit, just so you know, they did come out with the auction sizes, and they actually matched exactly previous quarter. So no decrease in the auction size on the 3, 10, or 30 announced.
Well, let me tell you. Let me show you what I'm talking about. I'll go, if I can. I'll present my screen, so I'm not just talking about it, right? There we go. It's now in the system, so you should be able to see it. This is the target rate probabilities for.
There you go. Well, there's yours. Here you go, Steve. Why is it not there?
There we go. Look, there it is right there. The target rate's 5.7%. Current right now is 94% chance that we'll have those major cuts. So this is it. Now, when you look at the next meeting date, it is May the 7th. So we are literally 8 days away from their next meeting. Will they have that probability? And you can go into the June 18th. There's your next probability of a rate cut. There it is, the quarter, and then possibly here it's starting to slow down a bit. But they're saying by December, there you go, right in the middle. So if you look at a dot plot, or we can explain that later. But right here is where their target is 325 to 350s, and where the 10 years now sitting at 4.16. So they really are trying to get if you really think that they're going to start cutting, look at that, down to 3%. So talk to me, Steve. Is this right or wrong here?
It's right. Finally, I think maybe some people are beginning to acknowledge the fact that the Fed is going to have to cut. But all this comes in the face of the United States trying to get its checkbook in order. I mean, what the heck did Janet Yellen, former Fed governor, former Treasury secretary, what a terrible mistake in putting all the front loading of the U.S. debt in the short term and then allowing the Fed to go and raise rates all the way up to 5.5% and not flinch. Now we're faced with an opportunity to redo this deficit and push it out into longer dates as the rates are coming down. So I don't know if this is not, back to our abbreviated meeting on Monday, by plan here, that, this guy, Scott Bessent, is a market man who knows what it is like to stretch a rubber band to get create an action to get an opposite and create a greater reaction, reflexivity.
Yeah, you know how I feel about Aunt Janet. I mean, I found her to be completely. She's a very smart lady.
Yes.
And so is our Secretary of Treasury now, and so is Powell. But I think that the problem that we're saying is that the data they're looking at is so far behind that they're not keeping up with what's going on. I think the machine, the cog, is moving faster than they are, right? And the Fed doesn't want to move too fast, but this is getting a little bit out of control now. We're 2 years now into this.
That's right, Steve. It's the new market paradigm. Markets trade now in milliseconds. Markets adjust to new data instantaneously every single day, and the Fed is still using antiquated models, the same as the ECB. It looks like maybe somebody in the ECB woke up and suddenly nobody's talking about inflation. In fact, Steve, another comment that came out, how about this one? ECB policymaker Ali Ren came out on Monday. I agree with markets that tariffs will slow down inflation. There are mostly downside risks to our projections now. Holy macro. We should not, quoting, not rule out rate cuts below the neutral rate. What happened in Europe here? What a wake-up call.
We've had a bunch of data coming up. Pending home sales now coming in at 76.5. Forecast there with previous was 72 there. So pending home sales coming in pretty good here. Personal income up 0.5%. The forecast there was for 0.4%. So that was much better. March PCE price index rising 2.3% year over year. We expected 2.2. So there you go. Inflation ticking up just a little bit more. Fed goes, oh, looky there, right? But the previous was 2.7. So it actually is coming down a little bit.
Perfect. Right. So yeah. I think the world is beginning, and again, while we're so focused on the U.S., it is a global economy,
right?
And I think everybody is beginning to realize this, especially given the GDP prints across the globe. Japanese industrial production today minus 1.1% in March, coming off of a 2.3% gain in Feb. Eurozone consumer confidence minus 16.7. China manufacturing PMIs 49, down from 50.5. The world is waking up that whoa, we need something get together here. Otherwise, we all suffer. Again, back to my, is there a master plan here or not out of the U.S.? Wow, it really would be hard to say that. But if everybody suddenly comes to the table here, and in 3 months' time, we did talk, I have been saying May, June is the takeoff point. Maybe good things are ahead here, and this GDP print is kind of the last of the negatives. I think the market, I don't know where it is right this second, but I wouldn't be one bit surprised. What currencies are telling me is I think you could end up being in the plus. It's a Wednesday midweek. Whatever the close is today, put it on your desk, because Wednesday is the midweek, and then we come Thursday, Friday. Watch out. If you put a higher close in on a Thursday, Friday, it's over.
Gotcha. I need to run, guys. You guys keep on going. But again, Steve, see you on Friday, brother.
See you, Steve.
Mr. Flanagan, so DXY at 99.46, so it is pulling back up a little bit. Yesterday was that threat of losing that 99 handle again.
Right.
What do you think? Is King Dollar gonna start to make the move back to the upside here?
It's a slow progression. First, we have to put a nice base in, which I believe we're doing. I talk about weekly closes. They are so important in the model. everybody has shifted out of the US. So everybody is on the other side of the boat right now. And they're only going to come back if we begin to see some stability. And watch the closes. 2 weeks ago on the 18th, 99.08. Last week, 99.59. We're at 99.40. We're right below last week's close. I would react if I begin to see the dollar index up above a 99.65. To me, that's telling me the boat is turning. I would already say it is turning because I look at the dollar yen, the safe haven, 142.75 right now. 2 weeks ago, 142.11 close. Last week was 143.64. So we're slightly below last week. That's the one I watch. If I begin to see the dollar yen though has a little bit of a fudge factor here. What? Tonight on May 1st, we have the Bank of Japan. People have been saying they're going to raise rates. And I think the yen is beginning to surge a bit here in New York today as positioning is getting long yen. I don't believe Bank of Japan is ready to raise rates just yet. And I think if they pass, you're going to see them stuck at 0.5% here. And I think you're going to see dollar yen rally. So the yen, watch 143.65. That's the key level. In the euro dollar, 113.89, 113.62, last week's close. We're right now at 113.64. Bang on. The euro dollar makes up the 52%.
Euro dollar is dropping here pretty quickly this morning.
Yeah, and rightfully so. When you're getting comments out of Europe that are talking about maybe even going lower than the neutral rate, I think people are going, what do they see? Well, what are they waking up to? They're waking up to 2 years of anemic growth. And if they don't grow, there's no way they're looking at trade wars going on between United States and China. And they're clearly ending up the loser. So currencies are stabilizing. And that gives me the macro view that the worst of the move is over. And I'm not saying that you cannot see another downtick as we are seeing today, but you buy the dip, provided the currency markets use those closing levels very carefully. If we begin to get above that, the worm is going to turn.
Something must have just happened. US CAD here jumping up tremendously. 130, almost 138.5 here.
Well, 38.50. So, and CAD, let's face it, you've got 2 weeks of closes bang on here. 138.49, 138.55. So CAD is actually a great currency to watch here because at 138.50, you're smack dab in the middle of 2 weeks of closes. One side or the other is going to break and you're going to get a good move. I would favor an upside. They have a minority government now. While Carney did win, they did not get the majority, which means, remember, these countries where they have these type of situations, you could have suddenly a no confidence vote on any given day, and their GDP was negative as well, and that comes off of a string of anemic signals in their GDP.
Yeah, I mean, definitely there. You got good things. It's a bit interesting. Straight up to the high of yesterday, right there, rejected right at it. So that seems to be the spot 138.52 or so that I'm struggling with right now.
And we know money. We know money moves first, and that's why I'm emphasizing to the viewers here: keep your currency markets on your desktop. Be watching dollar yen, a great interest rate currency to watch. The euro dollar is going to give you the dollar trend. And why do I say it? Because everybody is out of the dollar, out of the U.S. markets. And if we begin to see the exchange rates turn, they're all going to have to plow back in. Today is month end. At 11 o'clock, the big money managers, the $1 trillion accounts, these guys all settle up with the month end fix, which happens at 11 o'clock. plus and minus 2 minutes either side. So this
Do you
is a
expect
big
to see
point.
any kind of rebalancing at that point, or do you think we stay fairly same way we're running now this morning?
Well, if I look at the month, the dollar has been absolutely crushed in the month, right? And typically, therefore, all of my foreign holdings have gained in value. So to maintain neutrality, I have to sell a euro dollar. I have to sell sterling in order to maintain my portfolio model neutrality that I have programmed in. So I would actually look for the dollar to get a real kick in this next hour. And then I'm going to watch the closing levels very carefully as we go through.
So phase out from there after that rebalancing. Right. What? How does the market accept that rebalancing? Is sort of what you're saying,
right? But you're talking about a situation that we could discuss for quite some time, and is a very hot topic in the currency markets. Why do we use a 5-minute window around 11 o'clock? So that's 2.5 minutes, where it's tick, 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 and people are balancing billions, hundreds, 10 billion, 20 billion. You're pushing massive amounts. Now, $7.5 trillion trades in one day.
Right.
And on that note, April is when the BIS, Bank of International Settlements, this April, they do their upkeep, where they will publish probably in June what the global currency turnover is. The last was 7.5 trillion. Given the month of April, I'm going to have to say we're going to be well north of 8 trillion.
Yeah, I would assume.
And it all is going to balance here, plus or minus 11 o'clock. It gets pretty, hairy at that time.
I can imagine. I can imagine. Do they do it at that time to give time for the markets to adjust before the close? Why do they choose 11 o'clock? Is it just because of the world UTC time or something?
Everybody needs a focal point, a singular rate. So there's a system, WMR, it's referred to, that publishes the bid, the offer, and the mid, and most settle at mid. And there is a jostling back and forth so that fund managers have a specific rate in which to balance the books at.
Okay, to close their month, so to speak.
That's correct.
It's almost like, okay. I mean, that's what I was curious. So because like crypto, at some point you'll probably see something like, not like that, but where there is, because there is no time that it ends, so to speak. It's 24/7. So when do you decide to settle? And it is interesting because in crypto they haven't made a general decision. So the crypto native companies that have options and things like that settle at UTC time, and the obviously CME and US based stock markets obviously settle in 3 o'clock or 4 o'clock, depending on what it is, start to settle their markets down. So it is an interesting, because you have that on the quad witching and on those days in crypto where you get two sort of hits. You see it first happen at about, I think it's 6 a.m. 4 a.m. is when it clicks off for all of the overseas companies. And then, you wait, until the afternoon that day, and then all the UCME settles. So it's just a little bit of a different,
and for the viewers out there, you want to follow a little something interesting from an institutional point of view. Turn your currency onto a 1-minute bar chart and watch at 10:45 to 11:15, or tighten it up 10:50 to 11:10, and just watch a 1-minute bar chart and the way it moves. I would expect this month to be incredibly volatile.
That's awesome. I will be doing that. So I thank you for that. Some of the stuff that you and Steve hit on there, and some of the views, it's I just don't think that there's a clear plan yet in place that sort of has us ready to turn around that boat yet. Personally, it seems like the boat wants to turn. Any good news does have the markets ready to jump in, but what I've also seen is then they just sell off. Nothing holds any water. I watched pre-market some great earnings this morning. It had stuff go up 4 or 5%. And that sell-off came, before even cash market opened. This volatility is crazy. As Steve yesterday, RCL had great earnings. Everything was wonderful. And now, 24 hours after their earnings, they're down almost 4% from where uh, they were when those earnings hit. So it's just some craziness out there right now.
No, you're right on, Howard. You are right on. Show me the money. I want to see something stick. I want to see an agreement. United States, India, huge. If that ever comes,
I'll take anybody. Like I said, I mean, give me Israel. Because what we keep seeing is even it seems that the U.S. trade partners, whoever it is, are pushing their counterparts. Like in Israel, they came out with a big statement Sunday into Monday that we're ready to go. This is going to be great. And then we're at Wednesday and there isn't anything signed yet. There still isn't any movement. There isn't any retalk. It's been this, announcement, and then it's like everybody disappears. It's sort of like after my first dates when I was in college. I can't get to return a phone call.
I kind of think that, we've got to wait this out. I would expect the stability to return to the markets. I'm seeing a bottoming pattern in currencies. That indicates to me that, people are beginning to say, I don't want to push anymore. I'm just saying, it looks as though a positive piece of news is going to spike us to the upside. It will begin to hold if it's an agreement. There was one other point that came out this week that I really wanted to share. I'm very, Howard, if you have a sterling chart, I'm really big on sterling on a negative view. Earlier this week, a piece came out, millionaires are fleeing Britain. And the UK last year saw the biggest outflow of millionaires in over a decade. I thought that was very interesting. High net worth individuals leaving the UK. I'm looking at a chart back to 2014, and the number was in excess of 10,000 in 2024. Now, the U.S. is always a recipient of high net worth individuals. I believe that the last figure that they're looking at is about 3,800 millionaires came into the U.S. Just another one of those little tidbits. But when I look at sterling,
I'm curious to see if that's still the case, because what we've seen is a big movement from Europe to Dubai for that. And, we started first in Asia as the crypto laws sort of moved around and things got a little hairy for the crypto billionaires and millionaires over in Asia. And they started to get concerned. We saw a huge migration to Dubai and Abu Dhabi. So I'll be curious to see if those numbers hold up and America still becomes the place they want to go. I'm with you. I think that's an interesting number. I'll be very interested to follow that, because I do think they're leaving Europe. The question is going to be, is the U.S. still the place they go?
The data is up until June of 24, has a net inflow of 3,800 into the U.S., which is slightly higher. In pre-COVID days, it was significantly higher. It was like, I think, 6,000 to 8,000. So, yeah, and Dubai, that is a great area in which people to go to. It's a very conducive environment.
Tax-free, all that kind of stuff that they have there as benefit. That's why I'll be curious to see it. It's a different world than even the last summer, I think. You know what I mean? That's why I think that's a great one to keep an eye on, because I think it's a bigger one to keep an eye on just for general stuff. Because let's face it, these billionaires that are moving, these multimillionaires, they're the people who create industry. And you want them to migrate into the U.S. and then they become Elon Musk and his family and things like that. These great entrepreneurs that come to us from other countries. Will we see that, or is that movement moving more to the Middle East and Dubai, which we wouldn't want to see?
Yep.
So I'll be very curious. That's a great one. I hadn't thought about that until you brought it up, but I noticed in the crypto, I know that it was a big offshoring out of Europe and especially Asia. When they did the big crackdown, when mainland China did the big crackdown on Hong Kong, most of those billionaires first tried Singapore, and then when that didn't work out for them as well, because of the high tax rates and all that stuff that Singapore has, they went to Dubai, it seems like. So I'll be interested.
That's right. Could you put that as a weekly chart?
Yep, I have it as a monthly right now. Hold it 1 second. There you go.
So if you look at the high that we're on right now in the far right of that, and go back to that second peak that we matched up, before the drop-off right there, before that drop-off, the closing level in sterling was 132.84. Sterling right now is
133.
let's see. Okay, so last week's close was 133.04, so we are slightly above. So watch Sterling very carefully. If we be, I'm sorry, yeah, 133.04. If we get below this 132.84, which would negate the previous two weekly closes, look out below. I think you could have an incredibly sharp move in Sterling, especially giving on the dailies the overextended upside that we are at right now. So just something to give the viewers there in Sterling. That's kind of my number one short right now.
Okay, yeah, I could definitely see that. I mean, that line that you gave me, I don't even know the last time we talked about this, so a while ago, is right about where it's at. And I'll point that on the other side. I do want to point that I don't want to be all doom and gloom here when we're talking, but the Qs held that 466 like a champ here this morning. So, you know, we know 466 had been the key resistance on the daily chart for, you know, the last couple of weeks before we finally broke through here. And now it's nicely holding up as support. So, you know, we couldn't break it on the 9th. We couldn't break it on the 14th, the 15th. We couldn't break it on the 24th or the 23rd. We finally got through it. It's holding up here today. That's my key thing. If we can hold this 466, I still think we keep that sort of bullish, you know, mindset in. I do think a drop on the Qs below that could start market sentiment in the wrong direction.
Yeah,
that's, you know, that's sort of what I'm worried about today is if we break below that sort of what was former resistance that turned into support, we go right back into it as key, you know, resistance levels, right?
That's right. So, you know, here we are Wednesday. Watch your closing levels in the currency markets. I very much, especially the fact that it is a month end. It sets up a Thursday, Friday counter move that could be an extension to the downside in equities, or it could be the reversal. But anyway, watch it carefully. I think the weekend is going to pose a lot of upside weekend risk. Normally, I would say 90% of the time I go into a weekend with downside risk, you know, news events. This time around, you know, you could have upside on the geopolitical front. I watch Pakistan and India very carefully. You know, I see that event going on. I know the U.S. and Pakistan have sort of relationships there. These are two nuclear-powered countries. Watch India suddenly cozy up quickly with the United States. These are things in the geopolitical front that could quickly, you know, turn into market-moving events.
Yeah, I agree. I'm a little disappointed with it. I thought that the relationship between our president and their president, Modi, was, you know, prime minister rather, was going to be a strong point so far. It hasn't, you know, it's early, so it hasn't really played out at all yet. But I really did think that was the one. I do think that could be the big game changer if we can get some sort of agreement and movement with Modi and the Indian government. That, you know, that would be just amazing buoy for the markets.
Yeah, you know, everybody's talking, oh, you know, the U.S. is going to have shortages of this and that. You know, I think I think we underestimate the smarts of our business community. Yes, they may not be able to get goods out of China if the situation gets worse, but there are alternate sources that they will quickly move to quickly. So there could be a very brief period of some shortages. Yeah, okay. But watch how fast U.S. businesses react and find alternative sources. And that's my big thesis on Mexico. I think the United States is going to cozy up very nicely with Mexico, and that is going to be an even bigger trading partner with the U.S. than it already is as the number one trading partner.
Right. Yeah, I mean, that's what, you know, U.S., Canada, can we see a refurb of that relationship, because it provides a lot of the things that we do need that we get from China outside of we get cheap labor out of Mexico for sure, but not to that extent. Yeah, that's definitely going to have to play out. You know, there's definitely uncertainty in front. You know, traders, make sure you're being nimble, make sure you have your take profits and your stop losses in place. They're just so important right now, because any news can come out of, you know, anywhere here and change the markets in a matter of seconds. So you definitely have to be nimble there, Mr. Flanagan. Thank you so much. We'll see you again on Friday. You have a great couple of days, my friend.
And you too. Thank you, Howard.